Hello, everyone. I'm John Featherston, the founder and CEO of RISMedia, and it's my distinct pleasure to have with me today one of the most interesting leaders in our industry, a person you should all get to know and understand how he's successful and his path forward, because he has significant opportunities, I think, ahead of his organization, but equally as important for everyone on this call. There's opportunities for you to learn from him and take some pearls of wisdom and apply them to your organization. So with no further ado, it's my distinct pleasure to introduce Jason Mitchell of the Jason Mitchell Group. And Jason, welcome to RISMedia.
Thank you. Thank you for having me, John.
Listen, there's a lot to discuss, and we've only got about 30 minutes together here. So let's get right to the meat of what you do. You're the #1 real estate team in the country. It's quite an accomplishment. You've been in the industry since 2006. And here's what I find incredibly remarkable about your success. You operate in about 22 or so different states.
41, actually.
41, okay, 41. And you've done over 28,000 transactions. That's a heck of a lot of transactions. Also, in your history, you've done over $15 billion in closed sales. Now, you're primarily a referral organization. You work from referral. You and I have had a private discussion about your success, and I said to you, you mirror image what we used to call the relocation businesses of the late 70s and early 80s. You've cornered a heck of a lot of that marketplace successfully, dealing with regional and national and some local organizations around the country as their referral partner. Tell us a little bit about your business model, how it works, and how it has progressed.
Sure. Well, thank you for having me. And for those that are taking 30, 40 minutes of their time today, thank you for joining the call. It's an honor to be here with you, John. We first met when, which is the origination story, actually, when my partners at Rocket Homes presented me with their national award, which was the homeownership award with me, you, and Damon John. So that was an awesome evening in San Francisco. That was really fun. So for us, our niche is we service businesses. And so we're responsible for 2 clients. One is the organization that's trusting us with their referral partner. And then second is also the client itself. And so we started this, I would say 14 years ago, 2010, 11-ish. I got a call. I'm from Detroit. And so my partners at that time, Quicken Loans, had a model where they were referring out to trusted agent partners to work with their clients. And that model really took off. A gentleman who started it, his name Sam Vita, became a very good friend of mine, and they trusted me to continue to grow with them. And now, who we all know, Mr. Doug Siebold, who runs Rocket Homes, they have allowed me to scale back in 2012 and 13. So I owe them a lot. But as I built our company, what I noticed was when you can drive referrals, you do a variety of different things. One, you add more value to your agents so they can close more business. By providing them with more business on the referral side, they also will increase their self-gen business. So it's not just from the commissions on the initiating file, it's also the domino effect of what those files bring when you're closing 30 and 40 plus transactions. So the word leverage really kind of lit a light bulb to me that if I can build a really niche model where we can do a great job at servicing organizations, perhaps we can get more. Perhaps I could scale this. So to make a very long story short, this year, 2024, we're on pace to do just over 100,000 referrals to our agents in those 41 states. What makes that nice is we only have about 750 agents. So our average agent is getting over 100 referrals a year. There's a lot of accountability to make sure that they're closing deals, that they're communicating well, that they're updating, but the partnerships now are quite vast. You know, some of our larger partnerships like Veterans United, Home Story, of course, Rocket, New American Funding, Zillow, Amerisave, Mr. Cooper, Freedom Mortgage, you know, the list goes on and on of some of the great organizations that we service, and it's an honor to service them. But really what I've done is take a centralized approach. In our headquarters is in Scottsdale, but every single one of our agents, whether they're in Miami or Seattle or New York or Detroit, it doesn't matter. Everyone's on the same system. They get trained the same way, same continuing education training, same CRM platforms. So everything is the same no matter where an agent lives. And so all it really is distribution methodology by lead source with awareness on the program itself. And then of course, updating and communicating the partnerships throughout the process. So we've kind of built this reload model, as you call it, for the broker world. And what that leads to is an incredible amount of transaction by our agent count. So today we have about, like I said, 750 agents or so, but we're pacing for around 11,000 transactions this year, around 5 billion in volume, and over 80% of that will come from our great referral partners. So it's very niche-y, but it does show you the power of leverage.
Let me ask a question. So the average agent is getting how many referrals, or will get how many referrals this year?
It depends on the market. A healthy approach is providing around 8 to 9 referrals a month to each agent, because remember, and John, you know this better than anybody in the business, there's a big difference between a pre-qualified referral and a top of funnel lead. You know, these aren't pay-per-click leads, Google leads, ad spend leads. These don't close at 1%. Our national average is around 16 to 18%, depending on the partnership. We have Relo. Relo is a very high converting referral. That's in the high 40s. But the reality is when I say that the average agent is getting around 100 a year, when you consider the closing ratio, what I always would press upon to team leaders out there is, team leaders would always say, well, I give my agents business. And I would say, what kind of business? And they say, well, I have a Boomtown account. So they get hundreds of leads a month. And my argument to that was, well, eventually they won't want to work them if they're only closing at 1%. It actually becomes a nuisance and a detriment to your team, because you're making people work leads that simply aren't going to convert. So what I always thought is, if we can provide good quality referral opportunities, we will have great agents that want to accept those great opportunities. And you know, we're constantly just cycling through and making sure that we have great systems, great accountability metrics, and communicating with our partners at the highest level, because every partnership is so important. We want our partners to know that they matter to us, because they're so impactful on not just our business, but our agents' business. So the relationship value of it and the goodwill is extremely important.
Oh, I can only imagine. And building those relationships, and we'll come back to building the relationships a little bit, because that's extremely important. Let's talk about what your business is like today in this changing marketplace. We've obviously, everyone has seen some sort of reaction to the lawsuits that have just been, many have been settled, some have not been settled, that are affecting how we do business, or may be affecting how we do business. What have the lawsuits that have been facing our industry, what have they done to your business, and how are you meeting this challenge?
There was a big lawsuit that came up, Colton. I didn't hear about that. I think it has been the biggest news in my career. You know, I was in Cabo, we talked offline, I was in Mexico, and all of a sudden the article comes out, and I mean, I haven't gotten off the phone since then. And I say that because there's been so much collaboration with myself and a lot of our partnerships. We're really fortunate that we are a trusted partner that we can have this dialogue with on what does this shape our future and what does it mean. The reason I think we're in a really good spot is purchase lending becomes critically important, because you need trusted agent partners to work with your purchase clients. Because the reality is that when we don't have trusted partners providing a great experience to consumers then go off in the wild, find any random agent, which could hurt the experience but also hurts the loan. And so having trusted partners is critical for purchase mortgage. And I believe that Mr. Seabolt's article that you guys posted 2 days ago holds true. I believe that while change is inevitable and the way we do things may change in a variety of ways, which is yet to come, what I also believe is true that Doug said is, I think every consumer still wants to walk foot in that house before they buy it. I know I wouldn't buy a home unless I walked into that home. I know I want to see it, touch it. I want to see what's around it. I want to see what the neighbors look like. Buying a home is an experience that doesn't happen often, and it's a very, very important decision for folks. And so if we take the notion that you need people to service consumers, we talk about we can draw up a transaction for less money, or you can hire an attorney to draw up a transaction and write a deal for you. Yeah, that's true, but they're not going to take you on tour 3 and 4 and 5 times. They're not going to show you 30 houses. And if they do and service becomes an hourly rate, what does that rate equate to? The reality is I think our system worked really well, but it was shaken up, and now we have to figure out and pick up the pieces of what that means. But I think we are in a very unique position because we service so many purchase lenders. And we know that our purchase lenders, more than anything, need trusted agents to walk their consumers through that door and give them a world-class experience on the real estate side as well as the lending side. And I think because JMG has a large footprint, we can actually be a nice benefactor of what does that mean for the future. Even if commissions get compressed, we can be nimble and we can be flexible with our partnerships to where we just want to service more of their consumers.
Jason, one of the reasons I wanted you on this podcast was this webinar was because of the fact that you have multiple relationships with so many different referral sources who are all phenomenal repeat customers of yours. Yet they act as if they're the local referral agent, like so many of our readers. You just happen to have a large volume, an incredible pool of business. Yet what you said a moment ago, that you believe that the agent is central to the business. The broker and the agent are central to the business. Consumers are united in the fact that over the past several years, 90+%, depends upon who which figures you look at, but the consumer wants to deal with a real estate professional. We don't believe that this lawsuit is going to change that complexion, but however, it gives us an opportunity. I'd like to hear your thoughts on this, to actually have agents, your agents especially, in your case, but agents across the country, define their value proposition better, so that the transparency is unquestionable, and the referral partner understands exactly what they're paying for, and the services that they're going to get, the skills that they're going to get, and the value that they're going to get. How are you going to be transforming your value to your customers and letting them know the transparency more than you've done in the past?
Absolutely. I think education is key in training our agents to have an intelligent initial discussion with the consumer that, quite frankly, we always encourage buyer-broker agreements. But as this becomes more common practice, I think there's a lot to unpack with this lawsuit. I hosted a town hall a couple of weeks ago, and people are more than welcome to go to my YouTube channel and check that out. I dive much more deeper into it. But the reality is that buyer-broker agreement, so as that becomes more common practice to consumers are now going to be more loyal to that real estate professional, meaning there's been so many times throughout my career that if I didn't get a buyer-broker agreement executed, that all of a sudden I find out that my client went to Pulte over the weekend and bought a home. And because I didn't walk them through the door, now all the time and effort and energy that I spent with that client, I no longer get paid. They call and say, hey, can we see this house at 1 o'clock? And I would say, well, I can show you at 4, but I have showings until then. And they get anxious and they want to go see that home right now. And because of that, we lose the deal. I think one of the great things coming out is that I look at any industry that's a service industry, your CPAs, your attorneys, you sign an engagement letter before you begin work. And I believe our engagement letter with the buyer broker is a very important thing. How we're going to change it is we are going to leave it up to the consumer to determine what they feel is in their best interest. So the more upfront and transparent that we are with our clients by having that discussion, by saying, Mr. Featherston, look, I'm really looking forward to working with you. I'm going to send you a list of homes that I think may work. You let me know the best one. In addition to that, I also have what's called our buyer broker representation agreement. Now, what this does is it lets you know what my services are going to cost. In most cases, we can negotiate my fee within the purchase contract so you do not have to come out of pocket. However, I will commit to you that if we are in jeopardy of that, if the home is not offering compensation equivalent to my fee, I will let you know up front and you can determine whether or not that home is a right fit for you. But you will know in advance if you may have to pay for my services out of your pocket, which hopefully we don't run into that scenario. And if we say those things up front, I don't think any consumer will have an issue with signing a buyer broker agreement, because we're letting them know in the forefront, we will let you know ahead of time should this be the case with that particular property. But John, I also believe what's going to happen is, a lot of these issues that they were talking about is this quote unquote steering, where real estate professionals were steering based on percentage. You wouldn't show a house if it wasn't paying 3%. So the DOJ didn't like this universal compensation. My argument to that, and I believe you and I agree, we can't steer nowadays. Everything is too transparent online. Now in the 80s and 90s, John, I'm sure agents did steer because nobody had transparency. But what this is going to lead to, in my opinion, is the experience of, let me call the agent to schedule a showing, but let me also call to make sure you may not have to come out of pocket because they're willing to negotiate my fee into the contract. And in the cases where they're not, that consumer is simply going to say, well, let's look at a different home then. So I believe the consumer sentiment is going to actually be consumer steering on their own accord by only picking those homes that are offering cooperative compensation so they don't have to come out of pocket. And what will happen is sellers will start to understand, I'm not getting showings because I'm not offering any compensation, not because of the real estate professional, but because the consumer simply doesn't want to have to pay out of pocket. So I believe we get to that world in a very fast way where, smart sellers understand the best way to commence a transaction is to offer the means for a buyer to make it as simplistic as possible to purchase your home.
I think you're absolutely correct. I think we're dealing with, and I'd like to have your opinion on this, Jason. We're right now in our industry, there's several 100,000 agents that are members of the National Association of Realtors that do less than one transaction. So
Yep.
Put those aside, okay? Let's deal with the 5, 6, 700,000 agents that are actually the backbone of our industry, if you would. Many of these agents, they're great. They're great. They've been in the industry. They are taking continuing education courses. They're just terrific. Yet there's a significant portion of those agents right now that I believe are confused. They are looking for the right education, the right action steps to take to do exactly what you're talking about, in order to not just maintain their present value proposition, but hopefully improve their value proposition.
Absolutely.
And as you mentioned earlier, I mean, this is in the world that we live in, the number of hours, days, and weeks, and sometimes months that are invested by good agents in buyers that they're working with these numbers are absolutely staggering. And to think that unless they are protected going forward, they need to be transparent. They need to be protected. We need to have the buyer understand that they're working for the buyer. However, this is the compensation that they absolutely deserve and have negotiated. Tell us a little bit more, Jason, about where you think we're going to be over the next 6 months to possibly a year as far as education in the industry? And what effect will that have on your growth and expansion?
I believe it is the greatest opportunity that my organization has ever had is right now, because we need great agents in the field to service clients and of course our organizations. By being upfront and transparent, what's going to happen is we're going to secure more transactions because we are now in an agreement. The agreement, as long as it's explained properly, no consumer will have an issue with, as long as you explain that agreement thoroughly and you are incredibly transparent with them. I had a friend of mine, his name is Alvaro. He's the CEO of Commissions Inc. And what Alvaro, he's from Argentina. And he made a really good point on a webinar that we did last week. He said, Jason, let me ask you a question. When you go to a restaurant, how much do you tip? And I said, I don't know. I said, usually 20% or so, because it's easy to do the math. And he goes, okay. So if you get exceptional service, you probably still have your standard tip of around 20%. I go, yeah. He goes, what if the service is okay? Do you still tip them? And I go, yeah. He said, what do you tip them? I said, probably the same. And he said, that is my whole point, is that when you see an agreement as a consumer, as long as it's explained the right way, most people are not going to negotiate you because it's simply part of your transaction. He also said, when your attorney sends you an engagement letter and says that their services are $550 an hour, do you call them back and say, will you do it for $300? I said, no. He goes, it's going to be the same way as long as it's explained the right way. So I believe that most great agents will actually find themselves in a position to where they're going to receive their full compensation of what will most likely work out to be a 3% buyer broker representation agreement. I also believe that we're going to have the VA, the FHA, Fannie and Freddie start opening up the opportunity for us to finance that within the purchase contract, which when you think about it, John, this is why I think this all gets worked out. It's going to be the agents that go into a situation of fear that shouldn't be fear. It's, hey, this is my job. This is my representation agreement. This is what I charge. This is what you get for my services. Most people are going to sign that document, which is going to protect them. But I also believe that when you consider the financing aspect, it's already done that way now. And I explained this, and a lot of people didn't see where I was coming from until you kind of break it down. But John, let's say we have a $500,000 home. And in today's world, the buyer comes in, they offer full price $500,000. From that, the net proceeds from the seller, you got say 6% commissions, 30 grand, and say you got 3 points in cost, title fees, etc., whatever. So really there's $55,000 in fees there. Every bank knows that there's fees baked in, that the value of the asset is not 500. The true value of the asset is 445 or 450, whatever it is. So you're putting down 20%, so you're putting down 100 grand. But the bank knows that the real financing from the value of that home is probably underwritten at a 90% or a 91% LTV right off the bat from a 20% down payment. It's just how it's labeled. It's where it's labeled for underwriting. So we already do this today. Now, where the problem comes into play is the VA and FHA.
VA, let's get into that, because that's a huge segment of our marketplace that is going to be potentially totally disrupted and underserved unless we do it properly. Go ahead, Jason. Tell me your thoughts on it.
That's why I feel this was reckless. I feel this was exceptionally reckless and done very fast to horse trade the NAR settlement of $5.5 billion to $400 million over 4 years. And in exchange for that, the Department of Justice got their headlines from an election year to say, we eliminated $30 billion in transaction fees from the real estate industry. It was all for a headline. So the DOJ, behind closed doors, horse traded with NAR and said, okay, we will allow the plaintiffs to accept somewhere in the ballpark of a 90% haircut if you give us this headline. They just want the headline, because the reality is sellers are still going to be able to offer whatever they want through a closing cost credit or some mechanism to make the home. John, when I sell my home, no one can tell me that I can't compensate somebody if they bring me a buyer. Like, Nobody can tell you that. It's just how we verbalize it within a contract. So now we're going to do it in a contract, right? But the reality is it was reckless because in today's world, you can't even put a fee to a VA buyer. There are no fees that a VA buyer can have. So now, all of a sudden, the VA is scrambling to find a mechanism to allow them to roll this in to the loan so they don't have to come out of pocket. It was done so fast. And to put the date in July seems to me that how are you going to get all these contracts changed, all the stuff that we need to change? You think that you're going to be ready in 2.5 months? Like, it just seems very fast, very rushed. So I don't know where that lands, but what I do know is this, is that lenders are in the business to lend. Lenders are in the business to have as many consumers that are qualified to buy as many homes as possible.
Mm-hmm.
We will find ways and mechanisms to get people to still buy homes, because if we don't, they will sit on the sidelines, because the reality is people that are putting 0 and 3.5% down don't have 2 or 3% out of pocket. And then people will hit you with, but they'll just hire somebody else to write the contract. But that's not true, because there's a process before you get to a contract. There's a process of touring. There's a process of work that is many hours of work.
It's education. That's why I believe, and I think you and I are in the same wavelength here. There's a segment of the marketplace, and we'll deal with right now FHA and VA buyers, okay, who will be dramatically, in my opinion, underserved if there isn't an acceptable form of compensation.
That's right.
For the real estate.
Also, John, one of the other things too that I keep getting online is, well, they'll just go directly to the selling agent. And here's my argument to that. So if I take a listing and I'm charging in today's world 3 and 3 versus what could be with a weak agent that doesn't provide the education of what offering cooperative compensation will do to make their home more marketable to buyers. If they take that listing where there's 0 offering of cooperative compensation to be negotiated, and you're taking 3% on the listing, the reason that, okay, so now you're not offering anything to bring up for a buyer. So now a buyer would be forced to come out of pocket with that 0%, no matter what, I'm not paying anything. So now people are saying that we'll just go to the selling agent directly. But to me, if I'm selling that home and I took the listing at 3 points, but 0 offering, why on earth would I represent a buyer and take the risk of dual agency if I have no financial compensation to do so? I would never do that, because I'm getting 3% regardless. So I'm certainly not going to represent both sides of a transaction to make $0 for the risk that I must assume. Plus, I think many brokers are going to outlaw doing dual agency without any type of financial compensation behind it. And I also believe that most states are going to look to saying you can't offer dual agency because the risk is so evident. And insurance companies don't want that. Insurance companies don't want to provide E&O policies where there's a world of so much dual representation, because there's going to be a lot more lawsuits. So the dual agency part, to me, this actually makes dual agency far more difficult, because selling agents aren't going to want to take on risk with no reward.
Let me change gears a little bit here. Your success, part of your success, Jason, you're such a successful owner, operator, visionary in and around our industry. The role of strategic partnerships has been instrumental in fueling and building your company's success. Yes. Tell me quickly, in your opinion, where are those partnerships headed? Is this a sustainable business going forward because of the changes that we might see in real estate? And if it is, where do you see your organization growing into over the next 5 years?
Well, for us, it's wanting to service and continue to do a great job with the partners that we have. And hopefully what this leads to is at some point, we will see a continued shrinkage in our industry with real estate professionals. And I believe that leads more market share for us. I also believe what makes our company unique is the ability to be flexible. And what I mean by that is, if we're servicing a consumer and say that there's only a 1-point offering of cooperative compensation, well, I want to be able to service every single client that our clients send us. So in order to do so, I need to be flexible with my agents so they work every single client that they get. A lot of agents would say, I'm not working for 1% or a 0.5 point. Where we will come into play is we won't take a cut or a split on that transaction where there's a certain level of reduction in commissions, so we can service every single client. So if we do see compression, I will pay my agents more in the field to just make sure we're servicing every single consumer, and I'll eat those costs. But what we'll end up being is more transactional with our partners and get more business because we can be flexible. Where a lot of the big box brokerages that have agents that, so you have a big box brokerage, take a RE/MAX or a KW or whoever, and you have a team under there or an agent under there, because the corporate splits and commissions can't be so flexible, they are going to find a lot of their agents simply don't want to work referrals because there's not enough money and they can't be nimble with these, what you call team commissions or broker commissions, where they have to be 60-40 or 50-50 on leads given to them, where if I got to pay 90-10 or 80-20 because there wasn't as much meat on the bone, so be it. I just want agents that can service every single client. And by doing so and being flexible, all my agents will still want to work every single referral that comes into our ecosystem from any partnership, which will hopefully lead to more transactions that we'll do because we have the ability to be nimble, where a lot of the partnerships won't have that ability.
So,
Other partnerships won't.
the flexibility of your system allows you to do quite a few things. I will say the following. We just published our 37th annual Power Broker Report. We've been doing it longer than any other organization in our industry. Some that started and they've stopped doing it for whatever reasons, I have no clue. But it's and when we publish our Power Broker Report, the amount of interest is tremendous on who these leaders are, running brokerage firms all over the country. Okay, I dissect and I look at many of the different firms and know many of the leaders that run those firms. Sure. And they too are very dynamic. They're thought leaders. They collaborate within their ecosystem, the agents that work for them. I think our industry is ripe right now for a select group of our power brokers. And you say big box. Well, a number of those big box organizations are very well run, and yes, they attract great agents who want to work within that system. However, you've carved out a niche that I applaud you for, and many that have gotten to know you applaud you for your ability to really take that niche and grow it significantly. At some point, my question to you, Jason, is: do you become a big box, if you would, or a big tent, and begin competing to some degree with these national brands?
I never wanted to, because the way I've always grown this company was, if I commit to a great agent that wants to grow their business, that as long as you're following our rules, which is accountability, communication, everything that we set forth, we're going to make sure that your phone rings every single month. And so if I flood a market center with more agents, but I don't have as much business to give them, my value proposition to my agents isn't as strong. And so our value prop is, and I think now more than ever, because if commissions do get compressed, you have to be more transactional. The only way to make up for lost dollars on a transaction is to do more transactions. And so if we can be that group that stays true to our commitments to our agents, that will never oversaturate a market with agents so you don't get 10 and then go to 2 or 1 referrals a month, then we can provide the best service to our partners because our agents are more accountable. See, I guess what I'm saying is we matter to our agents. We're our agents' biggest partner. We may have all these partners at a corporate level, but to our agents, JMG is their biggest partner. And if I dilute markets with adding agents and we don't add referrals, then I'm diluting the value that I bring to those agents. So as long as we stay true that if we have a great agent, we're going to do our part to make sure that we give them these opportunities. We hope to grow and expand by getting more referrals into the hopper from all of our partners.
Building more strategic partnerships.
Correct.
That provide more opportunities.
But agent count to me is not important. I don't care how many agents we have. I care how many referrals we can service. That's all that really matters. So if we're driving more referrals, that means I need more agents. And every year we've gone up 30, 40% on our referrals because we add more partners, but we also add markets. So if we open up new market centers, we're going to be a beneficiary by getting referrals into that market center. So the two things that fuel us are expanding and adding partners, and then expanding market centers. And if we do that, I think we're in good shape.
And in that order, right?
Yes.
So let's, we have a little speed round here. Okay, the last couple of minutes or last minute or so, and I think this is very intriguing because I admire what you have done, and I admire where you're headed, where you came from. The seat you have determines the vision, the view that you have, right? And in your situation, do you see your organization becoming the largest relocation / referral company in the world? Or do you see yourself becoming the world's largest real estate team?
I think those go hand in hand. It's never been about, am I the biggest? I like to say, are we the most effective? Meaning, do we provide more value than most? And my argument today would be yes. But I think your notion of, is JMG really just this contemporary reload company in a sense that is really functionally a brokerage, but really specializes in that kind of reload style? Yeah, I think that's kind of how we're built. I mean, we're built to service large partners that need trusted professionals to work with their clients, whether that's Zillow and Flex from search, or whether that's Veterans United and Rocket and whoever at the pre-qual stage, or if it's Relo in itself. We have the tools and capability to service large-scale partners with trusted agents. We just need to scale and add more market centers so we can do it on a true national level.
So here's my last question to you, okay? And you've been terrific. Where will JMG's next wave of clients come from? Where do you have marketing teams that are out dealing with referral sources? Are they corporate? Are they affinity groups? What are they? Tell us where your next wave is coming from.
I think what's going to happen is purchase lenders are going to find ways to provide consumer benefits like never before to buyers that say, great, if I don't have a fear of paying out of pocket and you're going to offer me compensation to pay my closing costs down and whatnot, I will certainly sign a buyer broker agreement with your representative who you say is one of the top agents in the market. I think what we're going to find is more sticky consumers because lenders are going to find better and greater ways of finding value to give to their purchase clients, which is going to lead to more stickiness for us when we receive it. So if our purchase lenders are offering really great programs to their incoming buyers, then we know that we'll be, as long as we're doing a good job, those clients are going to want to work with us now more than ever because they're going to be rewarded now more than ever than before, which is a good thing for consumers because the way I look at it is the best value that you can give consumers in the future is a wonderful real estate experience with a great professional and the ability to never have to worry about picking and choosing if that home is right for you based on do you have to come out of pocket. A consumer should never have to have that fear that they have to come out of pocket to pay for representation. And I believe lenders and search companies alike are going to find ways that when they drive a buyer into their funnel, what they're going to do is give them programs and benefits that allow them to have a peace of mind that doesn't have to be a fear of yours. You just have to trust our trusted professionals. And most clients will say, you got it. That sounds amazing. So I think we're getting into a new world of consumers are going to trust the partners even more now than they did before.
Trust, and because of where we are and where the world has led through these lawsuits, etc., the transparency and the spelling out of the value and the compensation can only help organizations like yours and all of our power brokers that are going to be defining for their buyers exactly the value and the services they're going to be providing and for how much. Jason, I have to say, I want to thank you for being part of this. Yeah, I hope our audience finds it to be very interesting. Also, just so everyone knows that's on this call, Jason will be part of the upcoming CEO Exchange in September in Washington, DC. Look for all your information. He's a wealth of knowledge, and I'm sure he'd love to meet as many of our attendees in Washington and share some information and hopefully partner with a number of you. So thank you all. Jason, thank you. Thank you to all your team. And thanks to all of our attendees for being part of this webinar.
Thank you.
Thank you.